Australia's middle class collapse. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard. Today, we have a very special guest, Kelvin Davis. Kel is a leading wealth educator, a celebrated author, an entrepreneur, and an investor. He's an expert on the demise of the middle class Australians are experiencing, and I'm so glad to be able to welcome him today to be able to discuss this topic because he's an absolute expert and he just had so much to talk about here. So, welcome, Kel. How are you going?
Thank you. I'm absolutely fantastic. Currently on the farm up at Kingaroy area, and it's beautiful days up here.
Oh, wonderful. Peanut capital of Australia. So,
That's right.
place to be. Look, you've put together a presentation today. I'm very excited about it. We were having a discussion before. There's so much going on in the country at the moment that impacts the middle class. Let's start off by having a bit of a look at what you've prepared, and we'll work through it and discuss it as we go, because there's so much there, and I just find it really fascinating. So can you start us off with this idea around taxation? Because it's something that really does impact everyone. It's something, when you're talking to me, that people might not even really understand. So let's start there.
Okay. To be able to start, we do have to give a disclaimer, though. So is that all right if we just say to people that are watching this that this is all for Ainslie Insights, and for the people who are watching this, I'm talking about the middle class collapse in Australia and why. This is the fundamental reasons, but it is not financial advice, and I'm not qualified to do that. And under ASEC laws, we have to class this as education. So any speakers, any conversation is just purely education, and we cannot say that it's financial advice for anyone because we don't know their personal situations. Is that okay?
Of course. And that goes for all the things that we put out on Ainsley
Yeah,
Insights. It's a good reminder that we really are just providing our personal opinions here and having a discussion. So it's not financial
that's
advice,
right.
and always do your own research.
Yeah, interview your accountants when you're talking to them. Some of the sad truth. Let's compare the Australian residents living in Australia and people who are either in business or not. We can discuss both. But if you look at Australia's corporate tax rate, it's either 27.5 or 30%. By comparison to Singapore, United States, Europe, and UK, it's all lower. So the corporate tax rate is one of the highest in the world. So that's not good. All right. This is an extract from Sky News, just comparing the corporate tax rates. But let's go back and have a look at the truth, because we're not told the hidden taxes in Australia. So more focused on personal income taxes. That's the general population. They're all worried about the, 18 or 19% going up to 30 to 45, 47, up to 47 cents in the dollar plus Medicare levy. Look, the facts are, if you go to the Treasury website in Australia, of which I did in my researching of the books, and that's my third book, and this is an extract from here, which is taken off the Treasury website. Australians will pay at least 125 different taxes each year. It's not just one. 99 are levied by the Australian government, 25 by the states, and one they consider as council rates. We'll dive into that in a minute. Now, from their perspective, the exact number of taxes is difficult to determine and may be higher than these estimates. This reflects the fact that they cannot calculate exactly how much tax the average person pays.
That's concerning in itself, right?
Absolutely it is. Okay. And if we keep going, there could be as many as 160 different state taxes, and there's 259 nationally. Now, everyone's focused on either GST, income tax, or company tax. What about all these others? When I asked accountants how many taxes in Australia, you'd be amazed they don't know. Okay. And this came from our Treasury website. So, understanding that, then we can look at the state taxes, of which there's stamp duty, vehicle, business, properties, on share transactions, filing fees, etc., gambling tax. Any insurance has got a tax, payroll, land tax. That hits me as a property investor. We've got customs duties, fuel excise. Everyone with a petrol or a diesel vehicle pays the fuel excise, and there's a GST on top of that. Technically, that's a tax on a tax, which is technically illegal, but no one goes there. Flood levy, and it just goes unrealised capital gains tax in super over $3 million. Now, just realise that the unrealised capital gains tax is being implemented in other countries and not just in super, it's outside super. So that's going to be a big impact to any investor. The percentage and the rates alter yearly. So if we go to council rates, this is a council rates is considered as one in the federal, but if we expand this, we even have a view tax in the Gold Coast City Council for anyone. I think it's above the 5th floor from memory. Any high-rise window now has a tax on it. It's not exhaustive, and they're not included in the 160 that everyone pays every year. Okay. Yeah. Our office space, we actually play the game differently, my wife and myself, because we rent our own property from ourselves and we rent our office from ourselves. So we play the game differently to most people. And as you'll see, that's the cover of the book there that goes into extreme detail about the taxes in Australia. Something else you may not know, the income tax in Australia was actually a wartime tax. And I have the newspaper clipping that's put in my book about that. It was introduced as a temporary tax during the war to help fund it, World War II. So it was never removed. Just a little bit of, trivia for you.
Well, and this is part of the discussion that's going on at the moment around the tariffs in the US as well, when
That's right.
Trump is making similar sort of statements there, going, well, this isn't actually how it always used to operate. These are things that came in during certain periods of time and just never left.
That's right. And typically, if you go back in history, there's 2 times that tariff has been implemented. One was in I can't remember the exact year, 18th century, and the other one was in 1933 by the Smoot-Hawley.
The Smoot-Hawley, yep.
That one. And both times preceded the war. Okay, so it was a depression and preceded a physical war. So it's not good to have these tariffs come up, but it's a sign of what's happening right now. Okay. Is inflation a tax? Well, the government printed the currency just recently. We can talk about that. But effectively, according to Ron Paul, and if you research in economics, inflation can be viewed as a form of taxation because it comes from printing the currency and reduces the purchasing power of everyone's currency. Now, in that information, it says the word money, but it's not actually money, it's currency. Okay. So,
and a lot of our audience will be very aware of that distinction, particularly when we talk about gold and silver, what constitutes money versus what constitutes currency.
I can come back to that in a second. Okay, just ask me that again. But from Tom Wheelwright, a United States accountant that works with Robert Kiyosaki, he taught me this one. To change your tax, you change your facts. Okay, and that's all it is, guys. It's very, very simple if you just follow the rules. Now, you mentioned about currency. I went to the Federal Reserve in New Orleans. That was 2018. The security is very intense. We have to take everything out of your pockets. You have to produce your identification, and I did. And I was allowed into the Federal Reserve building. And something that absolutely shocked me was written on the wall as you walked in on the left-hand side on the wall. I couldn't take a picture of it because it's not allowed to take any photographs inside that building or of the building. I got in trouble for taking a photograph outside the building. But inside the building, written on the wall, it says, "The world runs on a fiat currency system backed by nothing other than a belief of what you can buy in goods and services tomorrow."
Wow.
It's plain, it's on the wall, it's telling the truth, but no one ever goes there and reads it because of the security.
Not hidden.
It's not hidden at all. Yeah, it shocked me. And I couldn't believe it. And when I came out, I did a YouTube video on it. And yeah, security got upset with me having a picture of the building in the background.
Wow.
Yeah. So I've done some strange things in this, in this world. Okay. How about we look at the debt in Australia? It's huge. A bit of fact for you. In 2007, do you remember John Howard, Chris?
I do remember John Howard.
Yeah.
I like to pretend I'm young enough that I don't, but no, I very much do.
And what was the treasurer? Peter Costello? Yeah, Peter Costello. When they were controlling the Australian economy, we had no debt. We had a surplus. And at that point in time, the Australian dollar was very strong. It was a very strong economy. And you probably would have remembered or heard of Kevin '07 when Kevin Rudd came to power. And he started the spending, and none of the governments ever stopped it. So right now, from 2007 or 2008 through to now, the Australian government debt is now $906,000, just under $1 trillion. That's been spent. Who's going to pay that back? Okay. If we add on all the state government debt, I do have it here. I didn't actually write it out, but the state government debt is Queensland's $218 billion in the year 2007. That's a couple of years. Victoria debt's going to be $187 billion. New South Wales is $110 billion. South Australia government's $44.2 billion. Plus the other states, we're looking at about $1.5 trillion in debt. Who's going to
So,
repay it?
and that's a very interesting question, because if we think about the magnitude of that, and this is the same, I mean, I spend a lot of time looking at the US because I've argued for a while they're past the point of no return.
Mm-hmm.
Can you even pay back a number that large?
Well, it won't be me because I'm hitting retirement. It'll be the working population that's going to be working, like the kids coming out of school, for the next 40 years, 50 years. They're going to have to pay it back, as well as try and own a home. Something's wrong here.
Yep.
It's throwing the younger generation under a bus. And I believe it's wrong, but there's nothing I can personally do about it other than just say, hey, guys, this is happening under our watch.
Right.
And it's going to be hurting the middle class Australians. How are they going to be able to pay that back? A 1.5 trillion plus the interest on it. Bit scary, isn't it?
Well, the interest one, I know that's we've had some discussion around that. When you think about the actual impact of adding the interest on, that's where you get into that debt spiral that you can't actually escape.
Okay, all right. So let's keep going. Comparing house prices in Brisbane. So why do I like gold? Okay, and when did I start buying gold? Can I just go back a little bit? I started investing in property, I think it was 32 years ago. I did add it up. Yeah, 32 years ago as a property investor, 25 years international business experience, and 18 years buying gold and silver and commodities. So in the year 2007, when I started buying gold, I already had property. So to compare this, and I'm picking on the Brisbane market here because that's where I've grown up and lived in Queensland most of the time. Okay. In Greater Brisbane area, a typical house price was about $369,000 for a standard 3-bedroom, 1-bathroom house. Okay, just an average home. Gold price in 2007, when I started buying it, but I bought it from Perth Mint to start off with. I didn't have a clue who was around in Queensland area. It was about $764 an ounce, and this is in July 2007, when I started getting into that market of preparing for what's coming. If we compare the house price using gold as a denominator and not the Australian dollar, okay, and divided by an ounce of gold, it actually comes to 483 ounces. And I've bought houses in Brisbane area, or the southeast region, at that time, and I've also bought gold, so I can tell you exactly how it works. And it was around about 13.7 kilograms, or let's say 14 kilograms of gold to buy the average house in the year 2007. Today, as in 2025, Greater Brisbane area, it varies in price. Hang on a second. I can't get the exact number because there is a variance. We're looking at, where are we? 862,000 to 912. So I've picked about halfway, 888,000 for a 3-bedroom, 1-bathroom average house. Okay. Price of gold in 2025, well, Chris, it varies all over the place now. It's no longer stationary. So what
It
do you
certainly
think it
isn't.
is?
Well, it's varying as we speak.
I think today it's 5,100 and something. Yesterday when I did the snapshot, it was 5,267 per ounce. That was on the ticker that I looked at.
Yep.
Okay. So let's say about that number. Okay. It'll probably be more by next Monday anyway. Using gold as the denominator, okay, it then comes out to around about 4.79 kilograms of gold to buy the average house, or let's round it up, 5 kilograms. So have the house prices actually risen between the year 2007 and now? Well, actually, they've had a 64% decline in gold terms.
That's an absolutely fascinating way to look at it. And it highlights a point that I think most people miss. It's not the price of gold going up. It's the value of your fiat currency going down.
That's correct. That's correct. The value going down. And the central bank or the Federal Reserve in the United States can't say we didn't tell you about it because it's written on their wall.
Quite literally, it's on the wall.
It's on the wall for everyone to see as they go in the building. Okay. And when I saw that, I couldn't believe it, but it all makes sense now. Okay. It just, amazing. So when you look at property like this, it would have been better for me, okay, as a property investor, to buy metals first and then switch that into property now. Because I could have bought, three of the properties using metal.
Yes.
The only difference is the property gives me a cash flow every year. Okay. And that's, and a tax advantage, depreciation. So I do like depreciation. I do like investment properties. That I love that. And I do love business, but I've also fallen into gold and said, yes, I do like gold and silver. Okay, those are my favourite commodities.
And I've had this discussion with a few guests at different points. There really is an intersection between property and precious metals, whether it's for young people starting out that they maybe do their savings in something that's going up versus going down, to be able to get to that point, or whether it's timing the market a little bit and moving out of one into the other when the time is right, because as you've just highlighted through that example, that can make a huge difference.
Oh, yes. Savings, well, can I put it slightly different terms that I use? I don't save the Australian dollar.
Yes.
I will save in metals. I will take the Australian dollar and I'll convert it to income producing assets.
Yep.
Okay. Or another way of describing it, I'll take the Australian dollar and I'll shift it into currencies that are going to hold value. Now, gold is one, and I'll put it into Swiss francs or euro, which tends to hold better value than the Australian dollar.
Yep.
Because it comes back to 2007, we were at a surplus. Now we're in a debt. The rest of the world sees this, and our dollar's been pummeled. It's been destroying our middle class. And people who are putting into superannuation as a fundamental policy, it's a saving of the currency, but what you can do with it's very limited, in my perspective.
Yes.
Okay, so not for everyone, but I stopped contributing to our superannuation in the year 2000 because I said I could make more money and do a better investing outside super than inside super for me.
Yep.
Okay, but that's not financial advice for anyone else, but that's what I've done. Okay. Does that make sense?
No, that does make sense. I mean, I also argue, depending on the context, but for a lot of people, a self-managed super fund where you're investing in the correct things can be the best tax effective, or most tax effective way to do it. But your point is absolutely valid. It depends on the person and the situation.
Correct.
And I know a point that is particularly relevant for you when we were talking before, and I think you're about to lead there through this discussion, is some people are simply choosing the exit path here to go, well, I don't want to be part of that system anymore. I want to look elsewhere. And you've already alluded to that with some of these foreign currencies. How do you think about that aspect?
Yeah, it's what people are doing. For myself, my super, self-managed super for my wife and I is all in metals, okay, or business loans to other entities, and that provides the cash flow, but most of it's stored in metals. A disclosure, we did have a problem with our crypto last financial year that the government changed their perspective and forced us to sell it. So we sold it under duress, as I ticked the box, because the tax officer said, no, we can no longer hold it in the form that we had it.
Right.
So, yep, guess what? It's converted to other currencies. Okay. So, yep, out of Australia. Okay, done. Because I'm at the retirement age now. I'm over 65, so I can do that.
Yep.
Okay. Yes. Looking ahead, where we're going. Where's the button? So for the audience, hey, I'm not the professional here. Chris is. I'm just sharing my journey. Okay, what I've done. And the middle class wealth is leaving Australia. I've attended Nomad Capitalist and Andrew Henderson up in Kuala Lumpur, and I met hundreds and hundreds of other people that are leaving. And I think from memory, Australia was number 2 in the audience.
Wow.
So as entrepreneurs and the middle class from Perth through Adelaide, Melbourne, Sydney, up to Brisbane, and a couple from Cairns, but they were just exiting Australia because they'd had enough. Okay, they were just sick of the persecution's not the right word at this stage, but it was the continual attack on their wealth, taking it from them. And they're going to other places. Let me just say the destinations first. Malaysia was one of the top on the list. Philippines, I know many business owners that have relocated to the Philippines, and they've set up in places like Clark or Manila, Eastwood, Makati, and they've re-established their lives there. And depending on where they're based, the tax liability can go down to about 10%. And that's a significant difference to being in Australia. And they've completely exited the country. Frontier markets. So Philippines is more of an emerging market. Vietnam's more of a frontier. It's Very, very early stages of entrepreneurship. So the rules are different. It's more like a Wild West that you've got to be on your toes. And Cambodia falls into that group as well. I've been to Vietnam. I haven't been to Cambodia. Okay. Thailand, many retirees and small businesses, consultancy firms are going to Thailand because of the taxation implications, mostly, and that is any money that you're making overseas does not get taxed in Thailand. Okay, it's tax free,
Right.
and the cost of living there is a fraction of Australia. So depending on where you go, North Thailand, Chiang Mai, Chiang Rai, or down to southern Thailand, it's cheaper up north than what it is down south. Okay, but retirees are also doing it, and we met many expats that are there. And I've got some of my insider community that work with us every month, and they learn and they implement things, the community, and I've got some people in Thailand as well. Dubai is another favourite location, and it's typically more upper class, and there's a lot of Canadians, a lot of United States are heading to Dubai. Personally, I don't like it. It's too hot. It's too hot,
And
dry.
that's coming from someone who lives in Queensland.
Yeah, but it's too hot. No, too dry. I couldn't do Dubai. Okay. Thailand, I could. Philippines, it's not me. Malaysia's not me. So Thailand is on the list of possible destinations. Panama's another favorite. And I have contacts, a Swiss lawyer that handles people who are migrating from United Kingdom, Ireland. Actually, it's United Kingdom more so. Ireland's a destination. There's Canada, United States, they're coming from, Australia, New Zealand, and Panama is one of the favoured locations as well. And he's very busy at the moment with people relocating.
Yep.
The wealth is escaping the Western countries at a rapid pace. And he deals with 7 and 8 figure entrepreneurs, helping them relocate and setting up the company structures, etc., to be able to do that. Higher end destinations, Ireland and Switzerland, they're my favourite. And the reason for that is government budget surplus in these countries.
Right.
So from memory, part of my research when I was in Ireland was, I think it was $64 billion surplus in Ireland. I'd have to go back to my notes to confirm that. And Switzerland is another favoured location, but that's more of the upper class. That's where they're going. Why? I can tell you the most common reasons, and that is erosion of freedom. As I said before, it's not quite persecution yet, but it is taking away the freedom or implementing rules and regulations so you can no longer have the freedom you did before. Social aggression, and that's if you put something on social media about business and the challenges, you can get targeted. There's a word for it, but it is quite aggressive to typically the business owner, and they've had enough of it. Tax burdens. I'd like to come into what I see in tax coming into Australia beyond what we already have, and I can share that with you, what I learnt in other countries. But basically, wealth tax, inheritance tax. I know Australia doesn't have an inheritance tax at this point in time, but we're the only Western country that does not. Something you may not know is that in your superannuation, if let's say you pass away and what's left in your super goes to your partner, there's no tax involved, but it goes to the next generation, there is a tax on your superannuation transfer to that generation. From memory, it's about 7.5, but have to confirm that. So there is a tax. You could call it an inheritance tax on super. It does have its own name. You have to speak to your accountant on it. So just be aware it is already there. And it's not in the 155 taxes that people pay or whatever it is. It's a new one.
And let yet another one on top.
Yep. Payroll tax, capital gains tax, etc. They've had enough, and that's why people are leaving. Business regulations or red tape. I'm sure you'd know about that, Chris, with dealing with crypto or dealing with banks and the red tape involved in just having bank transfers and stuff. It's becoming a nightmare. Yet I can go to Portugal and on the corner of the street, there's a crypto exchange that you walk in, you transfer the money to them and they give you the euro just off the bat. There's no controls on it.
Yep.
Very, very different. And I took pictures of the crypto exchange when I went in there just to understand the difference between that and Australia. Okay.
And that's a really interesting one to me, actually, because it's not necessarily saying that is the way to go either, right? Like complete freedom might not be the solution there, but somewhere in the middle would be nice.
You could describe it as an ATM, a crypto ATM. So you walk in, okay, you could have your crypto wallet, whatever it is. I don't deal a lot in crypto, okay, but you'd have your wallet or you just send it to the person and they give you the cash. It comes out in euro. I don't know the limits on that.
Yep.
Okay. The limits, there's a limit from memory on if you walk in with gold with Ainslie and you can get money back on, let's say, half an ounce of gold. There's a threshold there, I think, from memory. It's $5,000 or $10,000 is not reported to AusTrack. But in Switzerland, it's 25,000 euro. Okay, which is about 50,000 Australian dollars. Big difference in these regulations. Okay, and that's why the wealthy are going, hang on a minute, I have my freedom over there. Okay, still declare, still do everything right, but it's just you're not watching me as much.
So that's probably the point I was trying to make. It's not that the answer is necessarily no regulation, but bringing the balance back a little bit.
Yeah, from putting you in a straitjacket to having some freedom to be able to buy and sell. Yeah. And pandemic overreach was a big one, especially at that conference. They just didn't like it. The level that went all the way through Melbourne, the people that were in Victoria, they were either relocating states or country, and their preferred option now was country.
And we've talked about that a lot before on this as well. A number of people from Victoria in particular who have migrated into state purely on the back of those policies at the time.
An interesting thing on the those policies, United States used to go for New Zealand being a destination, but that has backed off. They'd rather go to the other countries because New Zealand was very tight in their controls. And the pandemic is what switched people across to others.
Right.
That's my observation from listening to all these people and having meals with them, etc., and understanding it. One of the examples was I sat and had dinner with an entrepreneur, a multi-million-dollar entrepreneur from Canada, and he had just sold all his businesses, all his properties up, and he's off to Dubai. He's had enough, out of it. Okay, and that was just enough after the pandemic. He just picked up his family and relocated and started again. He would only be in his late 30s. So, and these people are no longer providing jobs in Canada. Okay, they're going somewhere else.
There
They're
are
doing
flow-on
something
consequences,
else.
aren't there? That's right.
The employment is going to suffer. Absolutely suffer. That's a private employment, not government employment. And the other one is money goes further in other countries. Example, living in Malaysia, it's relatively cheap. Vietnam is cheap. Thailand's cheap. Dubai's more expensive. So it depends on how you want to live. And with Thailand, for example, you can have your own chef that's live in, and you can have your own cleaner that lives in the house and does all the washing. So the cooking's done, the washing's done, the ironing's done, etc. So you just live life. Okay, you don't have to do the chores that go with it. So in Philippines, it's called yaya, In Fiji, it's called a Mary. So it's nice to have that in your property. And the business owners I know in Philippines, for example, all use those people to assist in the house, but it gives them a job as well. It gives them income, and they're
Yes.
supporting their family by you helping them. So it's not putting them down, it's actually giving them an opportunity. So, yep, when I lived in Fiji for 4 years running business, we had a person come in and assist us in the household duties, and my wife was helping us in the business. So, yeah, it works. It really does. So that's what's happening right now. And this has been occurring over the last, it's accelerated since 2022. What are we, 2025? So it's now 3 years. And for myself, we're going to go on extended holiday from 21st of February next year. We're off to Europe, and we'll be staying there for a couple of years. Okay, establishing ourselves there and having a base. So I am also setting up another base in another country. So I'm a living example of this happening.
So where to?
Good
where to
question.
for here for people? Not where to for Kel,
Yep.
but where to for here for people who aren't in a situation to do that, or don't want to do that because of, like, there's many every person is different. Every person's in their own individual set of circumstances. What do you see as, firstly, where the country's heading in that
Yep.
regard,
Yep.
but also, I suppose, beyond that, how do people prepare for that?
Yes. Well, the preparation is going to be very important. And I think there's going to be probably about 6 months to about maybe 18 months to prep. Looking forward, what do you need to prepare for? And this is not facts yet. This is my opinion on what's coming to Australia based on what I see. So to be able to prepare yourself, you need to prepare for citizen-based taxation, not territorial. So what will come to Australia is wherever you are in the world, you can pay tax back to Australia. Mm-hmm. Okay. United States is doing it. Australia hasn't yet, but we're the closest to it. Spain has a wealth tax, which is on every asset that you own, regardless of superannuation, whether it's in trusts or companies. If you have greater than 10% stake in it, you have to pay a wealth tax on that asset. And that's a yearly wealth tax. Inheritance tax, like UK, I think it's 47 cents in the United States. Don't quote me on that. I'd have to go back and look at my notes. There's a thing called rent pressure zones, which is if you own investment properties in certain areas of UK and Ireland, you're only allowed to increase the rent by 2% per year. Okay, that's the limit. But if your insurance goes up by 30, you still only have 2%. So what's happened is investors have sold those properties, okay, and exited. So there's no rentals. So the rental pressure zones has now caused no rentals in the rental pressure zone. But that's just what's happening. Unrealized capital gains tax is being implemented. Bank account tax. Now this has caught me out. On the 1st of the 1st, 2025, Italian bank accounts now have a tax on your capital. So any savings in your bank account is now taxed monthly. That's not interest.
No. Talk about disincentive to keep your money in the bank.
That's right. VAT is about 22%. Australia's one of the lowest. I think it's the second lowest in the world from memory. I think Thailand's 9% or 8%, and Australia's 10 at this point. We're the lowest, second lowest. Nationalisation of superannuation. In Fiji, it's called FNPF. That's Fiji National Provident Fund, and it's all been nationalised, where it's now the government's money, and they'll spend it how they want, and they'll control how you get it back in your pension. That's happened just recently, something similar to the Philippines. And if you leave the country, the funds stay there. You can't take it with you. So nationalisation of superannuation, I believe, is going to be coming, just like other countries are doing. Capital controls, restriction on access to funds. Now, I don't know whether you know, Chris, but if you, at this point in time, if you own a property, and I don't care whether it's in your name or in trusts or companies, and you want to sell that property, you have to apply to the ATO to get a tax clearance certificate to say that your taxes are up to date. Otherwise, the purchaser has to withhold a certain percentage, I don't remember the exact amount, and send it to the ATO. So it could be $100,000 sent to the ATO, and you get it next financial year when you submit your tax return. You've got to get that tax clearance certificate first. Okay, now that's the law in Australia right now. I expect that to advance beyond just the properties into other sections, because the wording is asset, not house. So I do expect that to expand. Okay. Fiat currency reset event like Bretton Woods 2.0. I do expect that to occur. So, another one, interest rates will drop. I forecast that November to our community, and then currency printing followed by rate rises. That's coming. The other one is travel restrictions. This is happening in multiple countries, and like me talking to you now, I could have a travel restriction placed on me going to the United States because I'm telling you the truth. Or when I go to Venice right now, there's a tourist tax I have to pay every day for me to be in that area, the Venice community. There's a tax applicable to me. So these taxes are coming out whether we like it or not. How do you prepare for it? This is what you need to know. This is what we're doing as the insider community. That's a group that I share what's happening with and all my research. I share it with them twice a month. It's first Tuesday and the third Tuesday of the month. We get together, and I've had international lawyers, I've had accountants, I've had my strategic accountant in Australia, I've had auditing accountants, I've had business planners, I've had all sorts of people, marketing people, come and share in the community what they see and how to help the people. So it's a insider community that's aware of this change that's happening in the world and what we do. Education, guys. Financial education is not taught in schools. Chris did, okay, to his students, but I didn't get any of that training, and most people didn't. So I encourage everyone to seek out mentors and study under them. For mentors, that's someone who's done it, not just theory, okay? Because there's plenty of people who write books but have never done it in real life. So
Very good point. Very good point.
those people is so important. And then to me, I suggest you put yourself on your own gold standard. Okay? Don't worry about the rest of the world. Don't worry about other people. Put yourself on gold standard. And I call it a sleep well factor at night. Okay? Interesting. I don't know whether you know, Chris, but there's a silver trap in countries like Italy, Ireland, Switzerland, where silver incurs VAT and GST.
Right. Is that because they look at it as the industrial side and gloss
Correct.
over the precious metal aspect?
And so if you buy silver, let's say in Italy, you have to pay 22% VAT on top of the price of the silver. And when you sell it, you have to then give that back, or there's a transaction that happens. There are some companies that allow it to be held in a bonded warehouse, so VAT's not applicable. But you've got to be aware of it. There is a trap there, whereas here in Australia, it doesn't have GST applicable on silver yet. Okay, so just be aware of that and speak to one of the Ainslie team. Okay, they'll help you out. What else are we doing? Shifting wealth into different forms of tangible assets and currencies while we can. Let me describe what happens in one of the other countries. I'm picking Fiji. If you want to pay for something in another country, you first of all get what's called a pro forma invoice. You must take that invoice to the tax office, and they then look at your tax file number and give you a stamp on that invoice to say, yes, you're up to date on your taxes. If you're not allowed to pay that bill. Then you go to the Reserve Bank and they give you a second stamp on that invoice, and it allows you to then pay that invoice. If you don't have the two stamps, you cannot do a transfer.
Wow.
Okay. So Australia doesn't have that yet. However, on property sales, we have something similar, and that's the capital controls I keep talking about that are coming in. Another form of capital controls is the fact that you can't get your, let's call the word money or currency out of a bank when you want. Okay, you've got limits to be able to withdraw every day. That is a form of capital control. And this is coming in. And for us in the community, we've become resilient with food, water, and physical security. I live on a hobby farm. And as I said, it's just outside Kingaroy, and it's about 89 different types of fruit and vegetables growing on the property, from pineapples, bananas, through to avocados and mangoes and tomatoes, all sorts of stuff grown here. And that means our grocery bill is minimal. And the advantage that we get is, or I suppose, we get shocked every time we go to the grocery store and we see the price of tomatoes. What the hell's going on? It's
maybe you might be investing in the wrong thing after all. It might have been some of that fresh fruit and vegetables.
So, but we do that, okay? And water, as in we capture rainwater and we drink our own rainwater rather than the town water. But we do buy from the farmers around and the farmer community, okay? And that's the Explore the Farmers Markets. The local farmers butcher their own cows, and we can buy a quarter of a cow from them and just freeze it, okay? It's not down here, but one of the other things that we have done, and a lot of the community has done, is taken ourselves off the power grid. And we did that a number of years ago, where we cut the wire to Ergon and the electricity provider, solar system, batteries and generator. So when they talk about electricity prices going up, doesn't worry us. Okay. We're off grid. But that was because 2017, we saw what was coming, and we decided to reduce the reliance on external providers. Okay. So it's thinking well ahead. And if people can explore residency options in other jurisdictions, and that can be, if you're something, you need to be able to do this fairly quickly, because Italy's just changed their legislation in the last 2 weeks. They used to have parents, grandparents, and great-grandparents. Any one of those born in Italy, you're allowed to be able to get an Italian passport. Well, now they've removed great-grandparents. It's only grandparents and parents that you can then get an Italian passport. And these rules or these changes are happening regularly. Since I went into Europe and researched many countries, last year, I then had to do an update as of February, because there was a pile of changes that have happened between Ireland, Switzerland, Italy. I went to Montenegro. We went to Belgrade. We've been France, Spain, Portugal, etc. And all these rules are continually changing. So if you've got the opportunity to be able to get a passport or residency options in other countries, explore that now. It can take you 6 or 12 months to get it. So it is, you need to do it, okay? it may not be there next year. And really the cost is not that expensive, a couple of €100 typically. Okay. The hardest part is getting the documentation, or the birth certificate of your grandparent, etc. Now, if you don't have a lot of money and you want to be able to do something, you need to stay current, keep up to date and aware, but there are other options as well, budget options. If you can't afford to do things like buy a hobby farm, that's fine. A young person, learn cooking skills. I went to Thailand and I studied under the master chefs in Thailand to be able to learn how to do the traditional Thai cooking. Now I have a lineup of people who want me to cook for them. Okay. So cooking is a skill that you can have to be able to help others. Okay. And it's not that difficult to learn, even the basic cooking skills, mechanics, building construction, carpentry. If you can learn those skills as a young person, you can help others, and therefore you're an important member of a community. And that community can become very important to you moving ahead. And for us, for example, I don't know farming skills here at all, but I do know beekeeping skills from my father. So I'm able to help the farmers that way with the beekeeping skills. Does that make sense? Because
That
if
makes
they
so
don't
much
have
sense.
those
Yeah.
skills,
Yep.
I have those skills. And that's how I give back to them. First aid, CPR, medical training, everyone can do that. It's not that hard, okay? And if you've got basic first aid, you can then help others in case of accidents. And that becomes a valuable person in the community or the people around you. Animal care, now that's not me, okay? Cows, sheep, goats, we got them around us, yes, but I don't have those skills. So I let other people look after the care of animals. And the other one is gardening, plants, greenhouse. No, my growing skills are terrible. My wife's got those, so she's the one that produces all this abundance of food, and we get during November we get buckets and buckets of grapes. So I don't drink wine or alcohol, so therefore I can't produce alcohol and wine. But we have table grapes, and we give those away. If you can't do that, forklift license, bus, truck license, etc., will help others, or even volunteer for a farmer, help them, learn trade skills, plumbing, painting, etc. Volunteer your time. It's low cost, it's budget items, but it makes you valuable to other people. Okay, and then that can be carried across borders. These skills, they're great.
I absolutely love that list, because I think people, when they're watching and go, well, okay, you've got this end where you could move overseas, and there's other places where you could be better off, but I'm stuck here because this is where. But you've provided solutions there that aren't expensive, that aren't difficult. It's even if you just have a slight mindset shift, to prepare yourself a little bit, you're still better off than where you are by just turning a blind eye to everything.
Yeah, and Chris, looking ahead, see, I'm disclosure, I'm 65, retirement age now, but this is the first time in my life I see this financial reset happening. And it's going to be a significant event that's going to upset the poor, the middle class, and to some extent the wealthy. But the middle class is going to get really decimated because they're going to be the ones who are targeted to pay back that tax bill. And so the middle class is either going to have to shift or prepare for this change. How? If you can't afford eggs, bread, the basic groceries, can you make it yourself? So there are options available. I prefer gold, silver, okay, and property. I love those, and business is fantastic. But if these aren't available, there are options available for other people, okay? And the people who I really feel sad for are the young generation, because they've just been given this debt that I don't think they're ever going to repay. Yeah, it's so sad. It's out of my control. But guys, it's in whoever's watching this, it's in your control to be able to take at least some action. Okay. And I beg you, please educate yourself, wake up, and then take action. Without the action, the rest is a waste of time.
I absolutely love it. Look, Kel, there's so much there to unpack for people to think about. How could they get in contact with you if they wanted to find out more, be part of that insider community that you have, or just generally get more detail on some of the things you talked about today?
Well, thank you. I'll just share a plug. I did write 3 books on it. So I recorded our journey. My wife and I created 3 books. The first one is The Secret Road to Wealth. This is the starting point where you write out your plan with your partner. If you are not in alignment, I can tell you it won't work. I've been through a divorce. Marissa's been through a divorce. So we've both been down that path. So that's not an excuse. You can recover. The second book is all about business, The Secret Keys to Business Wealth. And that's where I teach you how to be able to create businesses that don't require your time every single day. The third book is Accelerating Your Wealth, taking your profits that come from business, or if you're working, and then converting that into gold, silver, property, crypto, other asset classes, and doing that in a tax effective way. Now, these books are focused on Australia. Okay, it's not United States terms, it's Australian to make it easy. And you can get those books off my website. Okay, it's keldavis.com. Nice and simple, KELDAVIS.com. And on the top right, you have the Insider Community, which is a button that you click, you sign up, and you've got to accept it's education. It's not financial advice, and that's part of the onboarding process. There is a cost. It's $99 a month to join that community. And I share. If I'm in Portugal, in Ireland, and in wherever I'm going to be, Thailand, we share. And I get the experts in. I'm not an expert in every area. Hell, I didn't finish high school. Okay. But I learned what to do. And by sharing it with others, that's the way I give back. There's something, Chris, if you want to know a good book on what the future's going to hold, I recommend this one. And it is When Money Destroys Nations. And that's a story about Zimbabwe, what happened, and it's where we're going at a rapid pace. Not exactly the same, but it's about 80% accurate.
Well, part of the 20% that's not accurate is the title there. But I'll let people figure that one out for themselves. It's not money that destroys nations; it's currency. But we'll save that for another discussion. Look, thank you so much for your time. I know our audience is really going to appreciate this and so much of what you've discussed today. I urge people to go and check out those links you've provided and have a look at those books. It really is a great discussion. We'd love to have you back in the future to dig into some of these topics in a bit more depth. But thank you so much for everything you've offered us today here, Kel.
Thank you. Thank you very much, and thank you for listening.
Thanks, everyone, for watching. We'll chat again soon.